Hello and welcome to the December 8th, 2023 episode of Watching the Tape. This week's video is about market timing. It doesn't work. As a financial advisor, I'm often asked about the stock market right now. Do I think stock prices are going to go up or down in the near term? And my answer is always some form of, I really don't know. Now, I do realize that in many cases, the question is more of a conversation starter. I really don't think that my interrogators believe that I know where stock prices are going to be in 6 months or 1 to 2 years. I think it's impossible to predict short-term fluctuations in stock prices. There are, however, teams of analysts at every major Wall Street investment bank who have the unfortunate task of publishing their short-term outlooks on stock prices. And these are highly educated, highly paid analysts, by the way. As we approach the finish line for 2023, I thought it'd be fun to take a look back at the predictions of the year-ending value of the S&P 500 index that were published earlier this year by these well-known Wall Street banks, just to see how accurate they were. So let's dive into it. So here we have a table with year-end targets for the S&P 500 stock market index. I pulled the target prices from the beginning of the year in January and from mid-year in June. But remember, all the numbers you're about to see here are for the predicted value of the S&P 500 at year end. Okay, in January, Wells Fargo predicted that the S&P 500 would end the year at 4,400, and BNP expected 3,400, so kind of a wide range there. By June, some Wall Street banks had updated their forecast. Goldman lifted their target to 4,500. That became the new high, and BNP stayed at 3,400. And while we're not quite at year end yet, the S&P 500 today is at 4,550, which is higher than even the highest target. I thought another helpful way to look at this data would be to chart it out. So here is the price chart of the S&P 500 through June. Now let's add the Wall Street Bank's year-end predictions to this chart. And then finally, let's add the actual path of the S&P 500 since June. So now you can graphically see how far off most of these forecasts were just a little over 5 months ago. When I see folks who are much smarter than I am frequently getting the near-term predictions of the stock market wrong, then what chance do I have? Here is an amusing quote from a former Morgan Stanley chief U.S. equity strategist. If you're a strategist at one of the big firms and you're intellectually honest and do it for long enough, you're going to fall into what I call a 2x2 grid. You're going to be bullish, bearish, right, and wrong. And you're going to live part of your career in all 4 quadrants. Now, if someone were instead to ask me what I think stock prices will be in 10 years, then I'm reasonably confident they'll be higher. And not only that, I think they represent a good way to outpace inflation over the long term. And I'm talking about stocks in aggregate now, broad market indices. I believe that publicly traded companies will continue to compete, to innovate, and to grow their profits to justify higher stock prices over the long term. That is it for this week. Thanks for watching. We'll see you in 2 weeks.